I spent over 15 years working for the world's largest financial companies, to name some BlackRock and Deloitte. Whilst working there, I was responsible of advising clients on how to take the money they have today, put it to work by investing it so that they can achieve financial freedom. Since then, I've now embarked on this mission to actually build Ndovu so we can not just give institution clients but retail clients the opportunity to take the money that they've worked so hard for, invest it so they can also achieve financial freedom.
I spent the last 20 years of my career building financial services companies and offering financial advice both on the African continent and in the Middle East. I got together with Radhika back in 2020 to create this wonderful company called Ndovu that enables every single individual on the African continent as well as the African diaspora to easily and affordably invest in financial markets. Hello everyone, welcome to another episode of the Elephant in the Room podcast. As usual, I'm your host, the Chief Thinker, Ro Nyangeri, co-founder, Chief Commercial Officer of Ndovu. I am joined by my able co-host once again, the lovely
Radhika Bachu, the super striker of the team, the most in-person player in the team. Sorry, Ro, what's your role again?
I'm just a guy.
You're just the Chief Thinker.
Small thing that I do. Just think about stuff, right? Radhika, it's a lovely day. And then it's super cold though, this Nairobi of ours.
I know. Who knew global warming would affect Kenya?
It's a global colding.
Colding indeed.
Yeah. Now, last time we had a chat, we were talking about time. I have been an investor for quite a while, and I'd like to take you on a little journey. You made me close my eyes and dream about this scenario. I'm going to take you back, right?
I can't wait to hear it. Ro is full of interesting stories,
guys. Many stories, yeah. I'm an old soul.
Yeah.
The time that I started investing way back in the 90s, right? Locally. The experience was different then. Mm-hmm. Like extremely different. I remember when I told you about the KQ, the Kenya Airways purchase.
Yeah. When
I was exchanging banter with my dad around this, I was actually in Shags. We were up country, and my granddad was there as well. And
Papa Rogito, the big boss,
the man himself. And we had to leave the county because we want to participate in this IPO.
Okay.
We had to leave the county, come to the capital city, Nairobi. Right?
Yep. Oh.
Walk into a broker's office, fill all this paperwork, all these things, you know.
And tell me how long your KYC took back then.
Back then,
yes.
It was so insane that someone actually visited you in the house. So you're applying, you're sitting, I live in house number 345, Avenue ABC. Someone will actually come physically when they had time.
Wow.
They'll actually come and confirm, okay, it's this dude, and they're going to invest.
Wow.
All right? Now, we did not have things like Swift back then.
No,
right?
no.
There are no checks or very in the early days in this country.
Yeah.
ATMs were a fad. Like, there's an ATM from this bank. Right? It's a different age completely, right? So we actually had to withdraw money physically.
Wow.
Take it
I'm
over,
tired already.
Deposit it, take a slip and take it to the broker and say, hey, I want to participate in this.
Okay.
All right? That was a different time. Right? We're
definitely
focusing
was.
again on time here.
It definitely was.
Super manual, all the technology or lack thereof was glaring, right?
Yeah.
But here we are. We're in an age where tech is becoming super cheap.
100%.
We have telcos or internet companies bringing more Africans online every single day. Cost of data has come down. Again, I'm an old soul. What we used to pay for data in like 2000.
You're definitely an old soul, but we're definitely learning, so go ahead.
It's not what we are seeing right now, okay? So I think just beyond the aspect of time that you touched on, your focus on time should be time in the market rather than timing the market. This is the second aspect to it, that this is the perfect time to actually start investing because stuff around demographics, stuff around tech, there's an entire change that has occurred in the economy and society that favors you to actually become an investor right now.
Yeah.
Case in point, we no longer need to go to the bank, withdraw money and bank it somewhere else, we have mobile money. You can actually do that quickly.
Online banking.
There's online banking you can transfer.
Yeah.
Whether it's Swift or PesaLink or RTGS, whichever version of a money transfer that exists, you can actually use it.
Yeah.
You can use cards now. I mean, way back when I started, Visa was not even in this country.
That's really showing your age, Ro. Really showing it.
When is the right time for you actually to get into the market? So I'd like to probe you a bit further on this.
Sounds good.
Yeah.
So I guess for those who haven't listened to the last episode, I recommend you go back and have a listen. I think the one key thing we want everyone to take away is that when it comes to investing, it's not about timing the market. It's about time spent in the market. So how long do you spend in a market in order for it to make a meaningful impact on the money or kronas you have invested? So we'll take a step back, and the way we like to see the stock market is a place where you can actually buy pieces of companies is as human progress. So if companies continue to innovate, build, sell, buy, the stock market is likely to continue to grow upwards towards a positive way. And the reality is that because the population around the world is moving out of poverty, becoming the low-income individual is now having more opportunities because of the internet, having side hustles, more information is available. They're able to earn more and move into a middle-income bracket, which means naturally your consumption ability goes up. So the low-income person now can actually afford a smartphone. They can actually buy a laptop for their children. And as a result of that, the market continues to grow. And what a lot of people do with time, they think about when it comes to time, when should I start? I don't have enough money. No, the reality is that now would be the best time for you to invest, because the value is, and I'm going to repeat it again, is it's not about timing the market so you can make a quick buck. It's how long you spend in the market that really is going to drive your real value. And like everything in life, creating a financial plan takes time. Pun intended. Takes time.
See what you did there.
But also it is hard work that leads you to the goals. And if you get that into your mind and think about investing as getting rich in a steady, responsible way, you will be successful. Honestly, you really will. But if you're looking for a quick get rich quick scheme, that is a completely incorrect strategy when it comes to investing, and that's when actually a lot of people lose money. So if we go back to the 2008 recession, everyone is really familiar with that. There were people that when the market crashed, the people at the bottom of the graph, when markets were down, actually sold, and they missed out on 10 years of great growth that we've just experienced. And so when it comes to market, just remember it's the time spent in the market versus timing the market. But why is that important? And the reality is that, like I mentioned, there's the eighth wonder of the world. This time I'll get it right. There's 8 wonders in the world, and that's called compounding interest. And compounding interest simply means that if your money sits in an investment that is continuously growing, the interest that you're earning from day one will also continue to grow with the returns you experience over time. And that's honestly the most magical thing. Just imagine this. You are at home.
I'm imagining.
Keep going. Yeah. And you get a salary and you've put it in your investment account and you said, now I can chill. I've been working hard for my money. And you wake up 3-4 years into your investing journey and you realize it's tripled.
Be the happiest fella on the planet.
Exactly. Yes. So whilst you were sleeping, your money was working hard for you. But this concept only works if you're being disciplined with yourself and you're actually investing regularly and you're investing for the long term. Because like I mentioned, yes, there's some opportunities to get rich quick. Great. You can have a portfolio in your savings that does that. But your main majority of your savings should be about the time that you spend in the market by investing responsibly through funds. So
the key takeaway I'm actually getting here is how long you're spending in that pool. It's the time in the market.
Correct.
Rather than the timing, like you're dipping at all, let me get out.
Yes.
It doesn't work for you.
It doesn't, especially for retail investors, right? We don't have the right skill set to dip our toes in and out. How do we know a company is going to continue to go up? Or no, a company is going to come down at this particular point in time? You don't.
Yeah.
Why are you trying to time the market? The people who time the market as retail investors who are not professionals are the ones who lose money, and then they go back saying, I tried my hands at investing and I can't do it.
Yeah.
Well, you're meant to be investing for the long term, not just timing particular opportunities. And you could get lucky. I'm not saying you don't. There are multiple people who don't have the skill set who get lucky and share the story like, dude, did you see I made 200% on this
In
trade
3 days.
Yeah.
Yeah.
No, it's too good to be true, and it's gambling essentially. And just remember, with gambling, the house always wins.
Absolutely. I mean, over time, we've seen the movement of markets. People talk about the upside or the downside. What's your take? What's your take on this? 'Cause it seems like the market is a roller coaster.
It is, and actually, pandemic time. So what happened with the pandemic was everyone thought the markets would crash. They initially crashed and they came back up, and that's because it was something that no pundit in the world could have. Pundit are guys who predict what's going to happen to the market. So nobody had priced it in, because how can anyone know we're going to go into a pandemic?
Yes.
It hasn't happened since
1917, 18,
after the war. It hasn't happened since. So the risk of this happening couldn't have been on anyone's radar. And as a result, there was a down. And if you came in at that point, which thankfully I did, my brother-in-law did, your portfolios right now, even though the markets have come back down again, are doing really well, because there were so many people sitting at home and they had time to think about their finances. The pandemic brought to light, like, can they really sustain the lifestyle they have given they've lost their jobs? So people took their savings and put them in the stock market. And as a result of that, obviously the markets recovered very quickly.
Yeah.
But now we're going through a really interesting time. So different things affect markets, like the Ukraine-Russia war. Inflation is a little bit at the high, but these things tend to happen.
Correct.
Right?
Yeah.
So this is not the first time inflation has been high. This is not the first time we've gone into war. And as a result of that, yes, market pricing goes up and down. And right now we're in a position where we're currently at the low. A lot of people need to train themselves to see that if the market has come down and you truly believe investing is for the long term, this is actually an opportunity to buy, not to panic and sell.
Everything is at a discount at this particular point.
Everything's at a discount. So you and I know, like, if we just take a sector, for example, the healthcare sector, it's an industry that will continue to grow, right?
Yeah.
People are going to need healthcare services. Medicines are going to be developed. There'll be lots of distribution of different types of medical research, etc. That sector will continue to grow. Now would be a great time to buy that sector, right? Our healthcare fund on Ndovu allows you to do that. And you're buying at a discount because we know over time that's going to be consumed significantly.
Yeah.
And so the point that I'm making is that when it comes to the stock market, yes, there's ups, yes, there's downs. But what you need to remember is that when you're investing for the long term. So the in-between noise, i.e. what's happening right now,
Yes.
is seen as a buying opportunity. And in the same way, if the markets go really high and you're happy with that, you can also cash out and take some of the returns and use it on, maybe buying real estate or looking at different ways to improve your lifestyle, do an MBA, improve your skill set. But the idea is that when it comes to the market, it has to be the time spent in the market, and the noise that you see on a regular basis shouldn't be what you should be focusing on.
Yeah.
And that leads to a better investor. And just to close that, so there are two types of investing. One is active investing, one is passive. Passive investing is where you buy the entire market, and you do that through a fund. That's simply based on the concept of you're buying into the market for a long period of time.
Right.
These individuals over the last 100 years have outperformed active markets, which are when Ro goes into market and says, aha, I think Bitcoin is doing really well.
Yeah.
I'm going to buy at the peak of Bitcoin. And then
I'm going to buy at 60K.
60K. And then now it's crashed to like 34.
Yeah.
Or whatever it is right now. It changes so often I can't remember. Those type of investors over the 100-year period have actually lost money in comparison to somebody just going in and buying the overall market.
Yeah.
And the idea about buying the overall market, and I'm going to mention this again, is time. You need to train yourself to be saving and investing for your long-term goals, and you do that by getting into the market now.
So the passivity, it's super interesting, because when someone thinks passive, it means like, oh, you're just laid back, not doing anything. But when in financial services terms, passive is actually a sweet word here.
It is.
Right? You're avoiding all the headaches of trying to look at which stock, what is Sundar Pichai thinking at Alphabet, what are the guys Microsoft thinking here. You're just riding out the market, right? So super interesting.
So if you had 10,000 shillings today, what would you buy?
Well, super interesting. I mean, first and foremost, what I need to find out, I need to discover what type of investor I am in the first place.
I agree, yeah.
I'd have my own theories. I want to do X. I put money into it. It performs a certain way. And I'm like, no, I did not want that.
Yeah.
Right? So the first thing you actually need to do before you deploy this 10,000 is find out what type of investor you are. On Ndovu, we offer a channel, a very simple questionnaire. Do I want to use the word questionnaire?
Yeah, you could do it.
A wizard.
Okay,
in some parts of Kenya, that has a negative connotation. When you say wizard.
So a questionnaire.
There's a questionnaire.
Yeah.
You come on, you answer about 7-8 questions. Then it takes you back to investor profile, what we touched on in the first podcast. Are you conservative, balanced, or aggressive investor? Where you fall determines where you're actually going to take this money. So I'm super conservative. I don't want to take any risk with my money. I want this 10,000 to always be there.
Yeah.
Where I'm actually going to invest this money is not going to be a pure equity fund where it goes up and down, right?
Yeah.
I'll put it into something that's more like a money market fund, right? And if the money market fund is sort of diversified, when I talk about diversification, is we are spreading it amongst many things. So here we spread it between the Kenyan shilling and the US dollar. Right?
Why not?
So there's this nice money market fund. It will keep the capital that you actually invested. But that's how I will invest my 10,000 to answer your question. That's why I put my 10,000 bob. Yeah. Because we've seen the Kenya shilling as well lose value.
Yes.
Over the last 24 months.
Yes.
Okay. So if you had gone in, say you had bought a dollar fund at 105, 104, right now it's about 122. If you just exit, let's say,
you'd make money.
Theoretically, if you exit now,
you've made money.
You've made money.
You've actually made money.
Yeah.
Yeah.
But I would like you to stay in that fund for longer.
Yeah, because
it's not about short-term
things. It's not about short-term gains. Yeah. So for a conservative investor, you would definitely put it in a money market fund, which I think makes absolute sense. Any guidance if somebody's a bit younger and they want to earn a little bit more on their money, what would you do in that scenario?
Well, you're younger, you have time works in your favor.
It does.
Time works in your favor in terms of you can take more risk.
Yeah.
You can be creative, right? In terms of the sectors that you explore. The younger guy, I'll actually nudge them or urge them to put some money into an equity fund. Okay.
Makes sense, yeah.
But a smart equity fund.
Correct.
It's not just I'm tossing money into this random fund over here.
Yeah.
You'd rather buy an entire market.
Yes.
Okay. In 5 years, if you just do 15%, so if you do 15% growth for 5 years, you've actually doubled the value of your portfolio.
Yeah.
Now imagine you're doing 17% over the next 10, 15 years simply because you went in, bought in a broader market and bought a broader index. I mean,
you can't go wrong.
I should be 19 now.
I know.
God, stuff I could do.
I know. So if you're 19 and you're listening to this, and you're going to be joining the workforce very soon, make sure you start investing, even if it's literally 5,000 shillings a month, because it really moves the dial in the long term. And that's why now is definitely the best time to do it. You can do it from the comfort of your home. We give you access to global markets. We consume everything that's global. Our laptops, our phones, we watch TV, Netflix,
yes.
Showmax, it's all global.
Yeah.
And you can actually partake in the industry and grow with it. As you're spending and buying that, you're also investing and owning some of it. So you're leading to more of an ownership. And now we make it so easy and you can do it just straight through your phone.
Yeah. You're essentially investing in your own lifestyle, if you think about
Actually,
it.
Yeah, you are. Yeah. And then, Ro, so you've told me about a 19-year-old take a little bit more risk because you've got a bit more time.
Absolutely.
Tell me about, say if I'm in my mid-30s, and I hope I don't give my my age away.
Don't say anything, yes.
Yeah. Where would you recommend you invest?
Where I'll recommend I invest.
Yeah.
Okay? So there are a number of things, especially when you're in this particular age that we're focusing on. I remember the words of a New York poet called Biggie Smalls. So
Make money, more problems. Make money.
More money, more problems, yeah. So you do stuff, all these responsibilities come along, and there's something we definitely cannot ignore here is level of indebtedness.
Yeah.
amongst our brothers and sisters. There's only so much that you earn, but you have an exponential set of needs that actually have to be met.
Yeah.
Okay. So speaking as a 30-year-old,
Yeah.
the first thing I would do before actually deploying any money is look at my personal balance sheet. I'll actually check in terms of how much money am I making every single month, right? From whichever channel I'm making money from. From that, I have to deduct the debts or whatever I owe, be it mobile money, be it the banks, and something called black tax as well.
That's true.
There's a tax in there.
We'll talk about black tax when we do the financial planning episode for sure.
So you have to check, do your own balance sheet. By this I mean your net worth.
Yeah.
All the income that is coming in and the assets that you own, deduct all the liabilities. Now, with the amount of money that is left over, this is why you actually need to be very smart.
Yeah.
Okay. With the net amount, do a self-check. What is super important? What is a frivolity?
Yeah.
What can be reduced?
Yeah.
Then you decide, you know what? I have this money. I am keen on improving my financial future. I know I am a balanced investor. I know the type of investment that actually should be going in. Mm-hmm. Start channeling money into it. But more importantly, beyond just starting, is a discipline. Many guys start, it's like, I put in 5,000.
Yeah.
I'm going to put another in 2027.
Doesn't work.
You need discipline.
You do.
Right? Do it. Commit to it. Right? Yeah. Much like you would commit to completing Game of Thrones.
Yeah.
Yeah. You want to watch the next episode.
Solid series.
You need to do the same stuff.
Yeah.
With your cash. Right?
Yeah.
The sort of investments you'll go into in your late 30s, granted, will be slightly different from what you do at 19.
Yeah.
But what's important is you've actually started on it and you're committed to it.
Yeah.
Yeah.
And I think that even if you're in your mid-30s, it's not too late.
It's not too late. No.
I mean, you'd be in a better position if you started when you were 20. I wish I did. But you're not. It's never too late. And what this investing allows you to do is that in the future, it allows you to manage your own time because it lets you become financially independent. And what is all our goals? Like, no one wants to work for Elon Musk for the rest of our life. No one wants to work for anyone for the rest of your life. You want to be the owner of your own time.
Yes.
And so this is the greatest gift you could give yourself in your mid-30s. If you just simply started investing responsibly, I would personally build my portfolio to have the S&P 500, which is a blue chip fund.
Yep.
I would then put some towards gold because it's always great to have a bit of a diversifier, and a bit of real estate and a few other like healthcare or technology fund is how I would build my portfolio at 35.
Wow, I'm a sucker for sports. Right?
What?
So I'll replace,
Tell me what you would hold.
Your gold with a sports fund.
I like that.
Yeah. So all my babies together.
But do you see what I mean? Investing can be fun.
Yes.
It doesn't have to be the boring old passive is boring.
Yeah.
You are passionate about sports. I'm passionate about blockchain. I can actually invest in everything I've said plus blockchain, and it makes it more interesting because I'm reading and learning more about the blockchain space.
Yeah.
I've got some money at stake. I'm investing. It's making a difference. Okay, I like this. So investing can be a lot more fun than you think it is.
Now, beyond the fun, over the weekend I was at a wedding. Good friend of mine got married.
Okay.
Fourth wife. Muslim guy. He's done his
Woo-woo.
religious duty. He's got the fourth wife.
Yeah.
Right? What opportunities exist on Ndovu for a newly married couple?
So the newly married couple is very lucky because all the money they would have been given as gift money should actually go investing in Sharia-compliant funds, which are halal funds, which is the halal fund on our platform.
All right.
Now, what that simply means is that, as the Muslim community, they have certain criteria, things that they can or cannot do as a result of their culture, and we're quite inclusive in that sense because we do recognize that there is a big gap in the market, not just here but globally. Even this space globally hasn't been developed as much.
True. Yeah.
But it is now on the rise and people are thinking more and more about Sharia compliant investing. The bonds in that space are also known as sukuk, which I learned the other day. Yeah. And we're learning and developing that significantly. And what we found, and like your friend, there are not that many places for them to actually invest their money. And they know they need to invest because sitting in the bank account, your money is losing value, right?
That thing called inflation.
That thing
you
called,
mentioned. Yes.
So that not so friendly friend of ours, inflation, is a reality, and we're not thinking about it. We're not being smart with our money if it's in a bank account. So actually through Ndovu, you can get access to the halal fund. And what that allows Muslims, our brothers and sisters, to do is actually invest in a fund that is not investing in things that don't meet their religious beliefs. And so that's things like investing in tobacco companies, alcohol, weapons, if I can say that.
Yes,
Is that the
riba,
right
interest,
interest?
Yeah.
So we're opening up the market to help people like our Muslim community to actually start investing as well. And wouldn't you say that if there's anybody listening to this podcast and there's a particular fund you want to see on the platform, if you send it to us, we'll look at it and we'll decide whether it's worth holding. But it's open. We're happy to provide it.
Absolutely. With a caveat, as long as it's legal in Kenya.
Yes.
Because I know someone is going to reach out with cannabis. We'll have to have it, but in Kenya, it's not. Cannabis is illegal.
Okay, yeah.
Okay, Rats. Social media is super active. Multiple channels. Here we have a podcast. It will be on whichever channel is going to be hosted on. We have all these streaming sites. We're busy, tech-wise, right? There's a lot being tossed our way.
Yeah.
Now I'm tying it to something in the past that did not happen. When we were in school, and you mentioned this in the first podcast, we're not taught about financial matters. We're not financially savvy, all right? How does Ndovu address this? There's a huge need for information, not disinformation.
Yeah.
Or what Donald Trump used to call fake news. We need legit news here.
Legit news, yeah.
Legit news. How's Ndovu addressing this? How have you positioned from your side?
So I hear you.
Yeah.
Guess what? There's so much information fatigue. We're just being thrown information. What's useful? What can I actually action?
Yes.
Oh my God, I've read so much. What do I do in theory? What do I do in practicality?
Yeah.
Oh, I'm tired already. Forget it. It's a problem for another day. Forget it. I think that's what I would do.
Forget it.
Because that's the reality. There's just so much information being thrown at us.
Yeah.
So what Ndovu is doing actually is very much focusing on easily understandable information that can be actioned.
Okay.
And yes, again, we're here creating a podcast on financial and money, and there's probably a million other podcasts doing the same thing. What we're trying to do with financials is actually make it more relatable. And there is a big gap in the market, especially in Kenya, in terms of the information that's available. Traditionally, a lot of finance experts like to speak in financial language, so it's more jargon indeed.
Yeah.
So they sound smart. For Ndovu, the focus really is financial education, but financial education for the layman man. So what we've been focusing on is creating content on our Ndovu Academy that really relates to the end user by giving examples and making it relatable. We also have a partnership with Sauti Sol that is helping us communicate with the youth the importance of ownership. So how do you own international companies?
Yeah. Seated here, I'm like, huh? How do I do it?
How do I do it?
Yeah.
But through the Ndovu app, we give you not just access to local market, which already existed anyways.
Yeah.
Is that something new we're doing? Yes, we're making it easy to do it through the phone. But how do you now own global companies?
Yeah.
And that's the value that we really bring. And you can do that through the comfort of your home, like I mentioned.
You get ownership in the brands that you know, that you love, and you use
on a regular basis.
Yeah.
Yeah.
All right. We've touched a lot around time, right? Time. I think many of the listeners now would like to know about the cost. How much is it gonna cost to?
It's a really good question. Yeah. So I'm just gonna talk about my previous past. So especially when you're working abroad, things have become a lot more accessible in terms of fees. So if you're in the UK, traditionally you're not paying more than anywhere from 0.5% to 1%.
Okay.
On a fund, just generally. But that price competition, like the need to bring down prices to make it more accessible to individuals, hasn't really hit Kenya. And so when we set up Ndovu, that was my number one thing. I said it's unfair for people to be paying so much in order to access investments. That's actually unfair.
Yeah.
So at Ndovu, I can confidently say that we are the most competitive platform that provides access to financial markets locally and globally.
What are some of the fees? Can I tie you down and you mention
you can.
This is the amount? Yeah.
So if you were to invest 1,000 bob, we would charge you 1 bob. So in simple terms, we would charge you 1 bob. And if you put that into an example, if you went to other institutions, they would charge you 5 bob.
Okay.
So 5 bob, 1 bob doesn't sound a lot, but when you're investing significant amounts of money, and like we mentioned, you have to become disciplined in investing.
Absolutely.
So soon you're going to become a super investor. You will have a lot of money. And in the long term, that 1 bob to 5 bob difference makes a huge, huge impact.
Yes.
So even before you even look at investing, that's something that you should look at with all providers to say who is most competitive within this space. And we've definitely kept our prices very competitive.
Where you focus, when you stated the 1 and the 5, it's super interesting because if you think about it, there's, by bringing down the cost, it's like the investor is saving 4 bob more.
Yeah.
That previously was just going. Now you're investing it.
Exactly.
And then with power of compounding.
Exactly. Show
Super
me the money.
Yes.
Yeah.
So thank you, Rads. It's been super interesting today chatting about time in the market. Excellent banter around time.
Yeah.
To all our listeners, in case you have any queries regarding what we have on the platform, do you have any special request, any needs, please reach out to us. Support at ndovu.co. Please remember that, not .com, not .co.ke, ndovu.co. I'm the Chief Thinker.
And I'm the Super Striker.
And we are out.